What's up, everybody? Thanks for tuning in. Today we are going to be talking about the technical and fundamental analysis on SOFI. First, we'll be reviewing their earnings report from this morning. Then we're going to pull up SOFI's chart and see what it is telling us using my high 5 setup, my personal trading strategy. Finally, we will go over the fundamentals of the company and see what score my Valuation Pro Analyzer gives to this company. Stay tuned until the end because we will be going over where you should be buying this company at. Now that we got that out of the way, let's get into the earnings report from this morning. So we pull up the earnings report from this morning. This is their personal earnings release that they gave out this morning. SOFI Technologies reports net income of $697 million and net revenues of $697 million and net income of $61 million for Q3 2024, demonstrating durable growth and strong returns. Now the key thing here is that they beat on revenues and they beat on earnings per share. So they had a double beat and a raise in their guidance. Management raises their FY24 guidance. So after looking through their entire report, I couldn't see too many negatives. This company is on track. It's growing like crazy. And yeah, they're definitely disrupting the bank sector. So other notable things, 35% growth in members and strong product innovation remain key drivers of growth in the company, and net revenue with growth accelerating to 30%, driven by 64% combined growth. This company is just clicking on all cylinders, and like I said, they're very big disruptors in the banking industry. This is a long-term hold, and we'll kind of get into that a little bit later whenever we look over the fundamentals of the company and the fundamental analysis using my Valuation Pro Analyzer tool. So earnings across the board, to make it short and sweet, really great earnings. The stock went down about 12% and rebounded to now down about 6 or 7% as I'm making this video. So it was mixed on the receiving end from Wall Street and investors, but I'm going to show you now here in the technical analysis side of things why I believe this stock is going to rebound. And I was actually calling this rebound out on my X account this morning at the Ronnie V Show on my X account. Give it a follow. I'm constantly updating everybody on here. But I was essentially this morning talking about SOFI down 12%. Let me show you why it's a fake out on the chart. And basically in this video, I kind of talked about it a couple on October 26th about what I was seeing with the technical analysis. And then obviously we had a big rebound here. And we have continued to rebound throughout the day. Now getting to the chart here. So technical analysis side of things. So we have a cup and handle pattern. If you don't know what a cup and handle pattern is, it's basically just a charting pattern that has a high probability of success. Now with the cup and handle pattern, to break it down in the simplest way, you form a cup, you then you start at one area, you start at one location, basically one touch point. You come down, you form a cup, you get back to that point, you reject, you form a smaller cup, which is your handle, you come up, and if you're able to break it, now we did have this false breakout here, but it was very quick. Okay, this one is not very quick. This is on the weekly chart. This was 1 week. We broke out last week. We stayed higher. I said last week, look for pullback retest of cup and handle breakout. Once bounce is confirmed, enter trade. For my traders out there, and this is what I'm personally doing. But so essentially you had to break out. I was calling for a pullback. I said we could run up to my price target 1170 and then pull back, or we could pull back sooner. What do? We had earnings. We had this massive fall down to 12-13%, and now we are steadily back up here about 6 to 7% pullback. This is a weekly candle. It's only Tuesday. There's still plenty of time for people to digest these great earnings that they just had, right? Double beat and a raise. That is the creme de la creme when talking about earnings. Double beat and a raise. Beat on the revenue, beat on the EPS, and raise your guidance for the fiscal year. That is the creme de la creme when it comes to earnings reports. Everything I saw is really good. I think this company is going to rebound nicely, and I actually bought some options down here at this about between 10 and 12% pullback, and I'm up nicely on them. Took some profits on a little bit and letting the rest ride. So essentially, cup and handle. Once you have a breakout, 80-90% of the time you're going to get a retest of the breakout area, as you see we did, and then you're going to have a follow through, and then you're going to go upwards, not in a straight line, but you're going to go upwards slowly but surely, and you get a measured move. A measured move is essentially you take a ruler and you measure the bottom to the top of the cup, and you get a measured move of 638 bars, as we see here. 628, 638, whatever it is. And so you run this up and you get a measured move of almost 59%, bringing your price target to $16.93. Just a massive move. Now again, you have to remember it doesn't happen overnight. What I also do is I measure the length, the timeline of the cup and handle pattern. It started back in 2022. So this is a multi-year cup and handle pattern on the weekly chart. So you take the measured move, right? You get that, and then you take the measured timeline. Measured timeline is going to be June 2027. So can we get there faster? Yes. Can we get there later? Yes, but I don't believe that's likely because this is the exact measured move. So like I said, up and pull back, and I think we're going to now bounce and continue higher with this name. So my trading strategy is called the high five setup. It's the personal trading strategy that I use, that I have a very high clip winning percentage. So what it consists of is some sort of chart pattern. So cup and handle, head and shoulders, inverse head and shoulders, symmetrical triangle, etc. If you're new to all this, sorry, I know, or if you're just an investor, sorry, I would skip ahead to the end of this video for me to talk about the fundamentals. I do plan on bringing out some beginner guides to my trading strategy, beginner guides on setups, and beginner guides on like how to trade my setup and my strategy. So if you are an investor and you are only looking for the fundamentals in the stock price, I would fast forward to the end of this video, because I don't want you to sit around and be boarded out if you're not a trader. So, but if you do want to learn or know, then stick around. So my high five setup strategy essentially consists of 5 things, obviously. So you have a chart pattern of some sort. And with chart patterns, when you get breakouts, their success rate is 70% plus. Some are higher, some are closer down to 70%. So that is why you want to look for a chart pattern, my strategy. So we have a cup and handle. 1, check. 2, you have some sort of volume gap. This is your weighted volume profile here. You have a gap here from about $8.28 up to about $12.34 to about $13.16. But like I said, longer term, we're going for the measured move of the cup and handle. So 2, check. Third, we come down here to some indicators. This first one up top here is your stochastic. Sorry, your MACD. Your stochastic down here. This first one's your MACD. Your MACD is sort of a trend and kind of tells you the overall path of the stock price and where it's going. So this is the 0 line, and when you get a cross of the MACD blue line over the orange line, which is the signal line, when you get that cross, it's bullish. It's more bullish when you cross up, keeping that trajectory over the 0 line and heading higher. So 3, we have our MACD uptrending and over the 0 line, super bullish. Next, we have our RSI for our fourth main thing. We have our RSI continue to make higher lows and climbing and climbing and climbing higher on the weekly. It takes a lot for these lines to shift and these trajectories to shift and move around because it's a weekly chart. On a daily, they can move a lot more um, in a simpler way, faster moves. With these are way longer moves. So next you have your stochastic down here, which I call my trend line. And essentially my trend line is doing what? Moving up, moving up, moving up, making higher lows along the way and continuing higher. So do you understand what I'm saying now? We have a high five setup. 1, 2. So we have our chart pattern, cup and handle. We have our volume gap. We have MACD, RSI, and stochastic all going in our favor. So does that mean we just enter right away? No. So what I did was I entered on the breakout with options and shares. I took profits on the way up, and then I said, we're going to get a pullback. I sold out my last options yesterday, and bam, we got this massive pullback down here. And I've been buying on the way up options and selling a little bit. And now I'm holding because my price target is still at $11.70. That is still my first price target. And then I will keep some for the ride up to 1563 and 1693. So that is my technical analysis. That is my trading strategy. Like I said, it works. It works at a very high clip. I've worked on this thing for years and years, and it's taken me a long time to get it to where it is, and to nail down the strategy, and become a profitable trader and everything. So, um, I just crushed it on SoundHound the other day with this trading setup. It's been doing very well for me. So, all right. If you're not about the charts, enough nerding out on the technical analysis on the charts, now we're going to move into the fundamentals. And I will give a screener out there, a warning. With my Valuation Pro Analyzer tool, it gives a score up to 6. A 6 of 6 is an outstanding investment. Something like a Qualcomm, you have a 6 of 6 right here. Something like a Google, you have a 6 of 6. And that's just because they meet undervalued and they also meet all the other check marks. With SOFI, we are not there. But it depends on why you're investing in this name. If you're investing in this name because it's a disruptor of the banks and you're going more off of a price to earnings growth ratio, it's a 0.68 and it's below a 1. That's phenomenal. That is exactly what you want to see in this type of company growing at these rates. With a growth company, sometimes PEG ratio trumps all. For me personally, as you can see, I have free cash flow yield, forward free cash flow yield, PE, forward PE, PEG ratio, and your discounted free cash flow. Those are the 6 analyzing valuation metrics I use on whether or not to enter a investment. So I am personally only invested in one of my growth portfolios in SoFi due to that exact reason. I focus more on the PEG ratio, and I focus more on disruption. This company being the disruptor, and long term disrupting the banking markets, and being a lot more than $10.56 today, being more so a $100 billion plus market cap company, and today it's not even a $12 billion market cap company. So almost a 10x. That's what I focus my growth accounts on more. But my primary investing accounts, IRAs and everything, for me and my wife, I focus on this Valuation Pro Analyzer 6 of 6. I was buying CRM before it took off. I was buying Workday before it took off. This thing flagged me to buy Meta before it took off. Amazon, a lot of these companies I hold right now, and it just works so well for my main portfolios. It really gives you the whole picture of how the company's being run in all different valuation tools. And when you get a 6 for 6 lineup on the Valuation Pro Analyzer, then you struck gold basically. Um, as long as I believe in the company too. I definitely have to be able to believe in the company, which I do with Qualcomm, Google, American Express, Meta, SoFi, PayPal, Hims, Robinhood. I believe in it. It's just like when it comes to like what am I gonna put my money towards to give me the best bang for the buck, I'm gonna lean towards using this valuation metric tool that I've spent also years on making and perfecting and figuring out what I want to really look at and judge my buying a company on. And with this, all this stuff over here, you have your revenue growth, you have your revenue growth projections. You can come in here and change these. You can make it 20% down the board, right? And it changes you to a buy, right? So you can come in. I do have this. I have to figure out how I'm gonna give it out, how I'm gonna send it to people. What I'm gonna do with it. I worked a lot. Worked really hard on this, so I don't know how I want to give it out, right? If I want to charge for it or not or whatever, right? So still figuring that out, but yeah, it's pretty nice. You can just plug in the numbers. You can just update the numbers in here from each quarterly, which this one is updated from this morning's earnings already because I just came in here and plugged in a couple of numbers. So the biggest reason that it's fair value is $9 here is because of the fact that you don't have positive free cash flow with this company. So when you don't have positive free cash flow with the company, it's really going to ding these numbers. And as you can see, no positive free cash flow, and they're diluting shareholders, but with stock-based compensation, it's really going to destroy your numbers over here on the free cash flow less stock-based compensation. So free cash flow less stock-based compensation, revenue growth, your current margin of safety, your intrinsic value or your fair value, and then also your margin of risk. This is something I created and I made up. I don't know anybody else that's doing this, but essentially you trim the position 10% every time it gets to one of these numbers. And of course, that's obviously with making sure that you're updating this along the way. But you have a margin of safety, right? Why wouldn't you have a margin of risk? If a company really gets away from you and this company explodes up to $20 a share and none of these metrics are lining up and the company's not there growth wise, numbers wise, revenue wise, net income wise, EPS wise, like why would you hold on to this thing? Except for maybe some smaller positions in like your growth portfolio, like your buy and never sell, right? But I don't really play like that in a lot of my stocks unless I'm like super bullish on the future and just know that it's going to work out. And even then I still might trim some, like a Tesla. I'll still trim a little Tesla here and there, but definitely holding the majority of Tesla long term. So yeah, you see no free cash flow yield because you don't have free cash flow yet. Your EPS is pretty low, so you have a pretty high PE. I gave the 42 a yellow, which is like a medium, and that's because the company's growing a lot now. But like I said, these are the revenue growth rates I put in there. These are aligning with analysts, and I think it's good to align with analysts unless you're really bullish and know the company in and out. I fully do not know SoFi in and out. I know it well enough, but I do not know it completely in and out. So I do not feel comfortable like a lot of other companies giving my own projections of revenue growth. But yeah, so thanks for sticking around to the end of the video. You have like I promised, you have an intrinsic fair value of $9 per share. So if it did pull back and continue to pull back 12%, get back down there and even lower, then your buy price would be $9 a share or less. And obviously you can sit here and DCA every 10% it goes under the intrinsic value. That means it's just a better deal. You're probably not going to see 50% down to 70% on most of these companies unless there's a stock market crash. So just take that into consideration. So I usually start buying under intrinsic value and then continue to build my position more and more. And then probably around 30-40%, I'm really buying heavy. I'm really building out that position strongly. Just because I I trust this Valuation Pro Analyzer that I built over the years, and I've seen it work time after time after time. So yeah, if you're long and you're bullish on SoFi long term, don't take this as a, oh my god, I need to go sell all my shares. Take this as a contrarian view, and take it for, again, if you know the company in and out, and you know the revenue growth rates, and you think free cash flow margin is going to explode eventually, and you're going to get higher than a 2 and 8% and a higher terminal value free cash flow multiple at the end of the 10-year analysis, then yeah, I mean, buy the company up. I think it's going to do great over time. But like I said, from my main portfolio, it's not lining up for me. But on the trading side, like I said, it is lining up for me. So on the trading side, oh yeah, I'm trading this thing. And just as we were speaking, guess what? It's only down 5% now. We had a 6 to 7% move off the bottom, upward now. And I called it all out on my X account. So if you're not following me on X, give me a follow on X. I'm posting this stuff every morning. I'm constantly posting throughout the market day. I'm about to do another video on PayPal about the setup on the charts and the fundamentals, running it through my valuation tool. And then I'm also going to do Hood, and I'm constantly posting trade setups using my high five setup strategy. I'm doing a lot. I'm really trying to grow my account and help as many people as I possibly can out there. But I really appreciate everybody tuning in. I know this was a little bit of a longer video. If you made it to the end and you think I deserve it, please like, share, and subscribe. And that's all I got for now. Until the next video, guys. Have a great day.